Hey YouTube, this is the Robinhood Investor. Hope you had a great week of trading. As always, I really appreciate your support. So if you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. Today I'm going to talk about my M1 Finance portfolio. This is my Roth IRA retirement account. Currently at $6,606. I initially started with $5,500 back in 2019. So this was contribution to last year's Roth IRA account. So you can see that current value $6,606. Net gain cash flow, so based on capital gains, $55,000. Market gain was $1,023. So that was the gain just by holding the stocks. You can how much it went up in value, and you can see that the dividends was $86.84. Total return was 20%. So taking a look at my holdings, you can see that my largest holdings is VOO, Vanguard S&P 500 ETF. So this is a very low expense ratio and has exposure to the 500 largest US companies. And I plan to continue holding this in the long term. And you can see that this specific position, total return was 12%. Market gain was $327. Dividends was $65 so far. Next is VGT, Vanguard Information Technology ETF. This position up 28%. You can see that in terms of the market gain, $148. Dividend yield is $7.65. Total return is 28%. And this is exposure to some of the large information technology companies. And it's a great way to diversify without buying specific positions. You can get great exposure to the tech sector just by holding this ETF. And it's a fairly low expense ratio too. Next is Apple. This is up 63%. You can see that market gain up $167, almost $168. Earned dividends was $5.22. So Apple, they're a consumer electronics company. Biggest revenue generator is iPhones. And I see this continue growing and paying their dividends in the long run. And I see them also increasing their dividends as they continue to have more cash from generator revenue to distribute to shareholders. And a lot of these stocks in my Roth IRA portfolio is exposed to the tech sector. So it may be a little riskier, but since this is a retirement account, I plan to continue holding these positions in the long term. So when I retire, I think these companies will still be around. But I plan to reassess year to year. So continue to rebalance this portfolio as the time comes. Next is Amazon. This is up 32%. Amazon, in terms of market gain, up $94. They don't pay a dividend yield, so I didn't get anything from that because they reinvest all profits back into growth. Next is Microsoft. You can see that I am up 47% on this position. Market gain $122. Earned dividends $6.29. I see Microsoft being a great long-term position because they're big in the cloud business with their cloud services, and they're big in the PC space with their Windows platform as well as Office 365, and they're also in the gaming sector with their Xbox platform. So I see this being a good long-term position to hold. Next is Alibaba. This position up 18.83%. The market gain is $53. No dividend yield, so they're reinvesting all profits back into growth. So this is an e-commerce play in China, and this is one of the largest ones in Asia Pacific. So I think it's a good exposure to that market. And they're also in the web service space. So as cloud computing grows, they'll also benefit from that. So it's very similar to Amazon. Amazon being a large player in the US, also in e-commerce, and also big in cloud computing. Visa, this one's up 25%. So Visa, you could see that market gain, $67. Earned dividends is $2.39. They do pay a dividend. It's not as high, but I do believe their capital appreciation, there's a lot of potential upside from their growth. And since they're a payment processing company, they benefit from a lot of the transactions, online transactions, as well as consumer spending increases. Visa will definitely benefit since it's one of the larger ones in the space alongside MasterCard. Last but not least is Google. This position is up 14%. So Google, or Alphabet, is the parent company of Google. Their main revenue is advertisement. So this position, market gain, $42.29. They don't pay dividend yield either, so it's purely on capital gains. So as you can see, my portfolio, a lot of the stocks, my initial allocation towards it was 5%. VGT was 10%, and then Vanguard S&P 500 was 60%. But over time, as these positions fluctuated, you can see that VOO is still my largest position. Next is Apple, and then my smallest position is Google. And like I said earlier, since these are positions I believe in the long term, and since my retirement strategy, I don't plan on retiring anytime soon. It's going to be a while, so these are definitely long-term plays, and I continue to follow these companies. So if anything changes fundamentally, I may reposition, rebalance the portfolio, but in the immediate future, I plan to continue holding this position and also holding in the long term. So that's all in my M1 Finance portfolio. What are your thoughts on these stocks? Comment down below. Remember to use my referral links below, and both of us get $20 for using personal capital or a free stock for using Robinhood. If you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. See you in the next video.